Hello and welcome to this video. Today I'm going to be doing a stock analysis on Servicenow. Now, if you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't financial advice. This is purely entertainment and educational purposes. So now, what does Servicenow do? Well, they make end-to-end platforms for digital businesses as well as a cloud-based solutions, which of course has AI embedded in it, and it is a quite interesting company currently, just given the fact that there are coming more and more digital businesses all over the place and AI is booming, and their AI embedding in their cloud solutions is quite interesting. Now, if we take a look at the graph, as you can see here, it has blown up quite hard recently. As you can see, back in the middle of last year, it was trading down at $600, and now currently we are trading at 1,000, but we were all the way up in 1,200. So it was quite highly priced, and it still is, as you can see. So if you had bought down here, you would have made a shit ton of money. So as you can see, it is a quite volatile stock. If we go and look further, as you can see, when we're down here, it's up and down permanently. So it's quite interesting. It has quite a high PE value, so that is why it operates like this. The higher the PE value, the higher it often jumps and falls. So that's something you gotta be worried about. So I wouldn't buy this stock if you didn't like a bit of risk. I personally love a bit of risk in my portfolio, so I wouldn't have any problem buying this. I don't own any at the moment, of course, I have to say, but it is quite an interesting stock and I am considering buying it. Now, if we take a look at the graph, as you can see, we have quite a lot of estimated earnings here, earnings reports that are quite positive, as you can see, most of the time, which is also why it is priced this highly. And this also means that they just know how to make their guidance properly. And now also, as you can see in the RSI, more often than not, we are trading up here in the upper channels of the RSI. Now, what is the RSI? That is the relative strength index. If it's above 70 over here, up here, it's overbought. That's these peaks up here. If it's above 50 but below 70, it's in the upper channel. As you can see, when you're trading up here, it is usually going upwards. And then when we're trading below 50 and above 30, we're in the lower channel. We were trading for quite a while here in the early parts of the year. And if it's below 30, it is oversold. That is these pitfalls down here. So currently we have turned around the trend of going downwards, which was had for quite a while. From all the way back in January, it was trading downwards or sideways, and for the first time in quite a while, we have broken it. And that was on this earnings report here. As you can see, we surprised by 5% of the estimated, and the analyst revenue was surprised by 0.15%. So quite great at the moment. And you can also see that we do have a golden cross right here. Now, of course, a golden cross is when the short-term momentum is greater than long-term momentum, which means that it is made a golden cross. Of course, the opposite is when we have these death crosses right here. As you can see, when the short-term momentum is worse than the long-term momentum, well, then we have a golden cross, and that typically means we're trading downwards, while golden cross typically means we're trading upwards. Now, as you can see, it's a huge company with $213 billion of market cap, so it's a huge company, and they make quite great money per share. That is also why their single shares are so expensive. As you know, we often see maybe 0.7 earnings per share. Well, they don't have that many shares, which is also why that each share is so expensive. They don't pay out in dividends, and they never have, and as you can see, they don't plan on doing so. Now, for the income, their income is quite great. As you can see, they're making billions of dollars. Now, their margins aren't that great, but they are improving them, as you can see, from 2020 and moving forward. So that is, of course, quite great, and they are just making more and more money, and that is very nice. That is also why I like the company, as we can see the revenue growth. And in a business that Servicenow is in, it is a very sticky business, so their customers tend to stay for quite a while, and it's easier to build better and better annual revenue. Now, the performance over the years on this stock is quite insane, as you can see here. Look at how many years we have with every single positive year is actually with 2 digits positive. So the worst year we have in the positives ones is 21%, which is quite crazy. Now, we don't have anyone that's like 150, which is, I kind of like it, because this just means that it's not overhyped, but this means that they know what they're doing. And year over year, if you invest in this, chances are you're going to get great returns. And we have 3 years with losses. Now, 22 was quite a big loss, as you can see, 38%. But then again, most companies in 22 really didn't make any great money. 16 also relatively poor, minus 11%. And then this year we're down by 2%, but it looks like we are turning, as you can follow this blue line down here. As you can see, at one point we were down all the way down here at minus, what is that? Minus 26%, now we're only minus 2%. So chances are we are going to move up here, and maybe we will join in the top here, maybe we'll join the bottom. We won't know until the end of the year. Now, the technicals on this stock, as you can see, for the day, it is a buy, and for the month, it is a strong buy, as you can see. And that's, of course, because for the short-term gains, it has increased quite nicely. Also for the month, as you can see all the way back from March, it did make this bottom out area, and then it dropped a bit lower, but then we did see a bit of support levels down here, which were laying on par with other support levels right here. And then we see this huge increases recently, and ever since the late April, we have seen very nice rises almost daily. So that is quite nice, and that is also why there is a strong buy currently for the month. Now the analyst rating on this is quite decent. As you can see, we have 46 analysts with 35 strong buy, 5 hold, and 5 buy, and 1 strong sell. So the strong sell is this one down here, and then the strong buy is probably the one up here with max 25%. Now I do think the plus 4.7% this year is quite modest, to be honest, but maybe we are gonna see some more. It is a tech-based company, and they always trade a bit more up and a bit more down than we expect them to. So as you can see, also just over the past 2 years, it has doubled in price. At one point, it was almost not 3 times, but it was getting up there. Maybe we'll see that. I do think it is going to end the year in about maybe 120, 1,120. That is at least my estimate for the stock. I do think it is a great stock to have just over the years. I think it's going to just be incredibly great. Now, given how expensive it is at the moment, it would not surprise me if they in the future made some stock splits, because that is usually great, because this brings more volume to the stock. And more often than not, if a company has this high of a price, a company will make a stock split, because then more people will be able to buy the stock and the volume will increase, which is more often not positive for the stock. If you read on it, most of the time when a stock does a stock split, it's great for the stock in the long term. Now that was my analysis on Servicenow. Now if you did like this video, please don't forget to leave a like and subscribe. And of course, if you want me to make a stock analysis on any other companies, please leave them in the comment section below.